Good evening, good afternoon, and good morning to all the Praktani brothers from around the globe. I welcome you all to the 86th Praktani Adda session. So this Adda, the idea behind organizing this Adda is to provide a platform where our Praktani brothers can gain the knowledge from our brothers' experience, and also it also provides a platform where they can meet each other. So that is the whole idea behind all these Adda. So with that in mind, today we have this session on GST by our very own Dada from 2007 batch, whom Amit da will introduce. So before that, I would like to introduce our moderator for this session, who is Amit da, who is currently working as Assistant Vice President in Morgan Stanley. So without any further ado, I'd like to call Amit da on the stage. Amit da, the stage is all yours. Thank
Yeah,
you, everyone.
yeah. Thanks, Vikas. Good evening to everyone, and pranams to all seniors, dadas. So today I have the pleasure of introducing one of the most accomplished guy from our batch, Saurav Kumar. So Saurav is currently working as Assistant Commissioner in GST in Bihar. Back in his school days itself, he was setting benchmarks for everyone, not only in his studies but in other areas as well. He was also our class topper, class 10th board topper with unbelievable 98.6% of marks, and also received the President's Award for this extraordinary achievement. Later, he graduated from IIT Roorkee. So he has done dual degree, I mean BTech plus MBA from IIT Roorkee. He started his career in exterior as a data analyst, but later resigned to prepare for civil services. Sort of, if I'm
Yeah,
mistaken
right,
somewhere,
right.
feel free to jump in and correct me. Uh, so he started his career in exterior as data analyst, and but later resigned to prepare for civil services. He missed civil services by barest of the margin, but I mean, he has a fair bit of knowledge about how to prepare and how exactly to go about. He spent a fair bit amount of time in that, and he even appeared in interview once, and I mean, written means quite a few times. So to all our juniors who plan to prepare for civil services, I mean, they must seek advice from Saurav once. But what makes Saurav special is never only about the I mean studies. In his school days, he was equally active in cricket, quiz competition, and all kinds of extra curriculum curricular activities. And of course, like all of us, he was also involved in fair share of mischievous activities. Yet somehow managed to score more than 80% in behavioral marks that we used to get at the very last day of our Vidyapit days. So he tried to balance, I mean, both, I mean, getting involved in mischievous activities as well as scoring high in behavior marks. Just speaking about some of the major events, and one of them is about cricket. So I just want to recall one of the major event uh, of our famous match between class 7 and class 8, which happened in 2003. We were in class 7. We were junior then. It was a low scoring game. And if I remember correctly, it was a very hard fought match. Ravisda scored 25 runs after being dropped twice by me and Sivansu. My catch was a little bit difficult, but Sivansu dropped us hitter. Somehow we managed to tie the match with a few controversial decisions, probably going in our favor since we're junior then. Jivanda, if I remember correctly, Jivanda he was the umpire, and I faced the last ball, and we had to score four runs to win the match, and somehow we took 3 runs by just running through the wickets. And this incident, I mean, made our seniors absolutely furious after that, and honestly, we stayed a bit scared for a few days. I still remember Davis da. He was so frustrated after giving too many runs. I mean, Saurav scored, three back-to-back boundaries of his ball. So it was, very, still we will remember every bit of it. I think after a few years, inter-class matches, it got abolished. There were a few incidents which happened and fights between seniors and juniors. But the best part is that even today we all remain very connected with all our seniors, juniors, and our batchmates. So whenever I visit hometown. I stay in Devgar. My hometown is in Devgar. I try to connect with all our seniors. Ayush Da is there, Satyam Da is there, also with our junior fellows. So it's still, we try to revive all our memories and try to stay connected. So today, Saurav is going to share his experience of working in GST department over the last few years. I'm sure it will be very insightful and interesting for all of us. So please welcome Saurav. Over to you, Saurav.
Thank you, Amit, for your kind words. Although you have exaggerated things a lot, but feels good to hear such wonderful words about myself. Now I request you to get married soon, then we can have a party. And now coming to the Adda, today we will be discussing about the GST Act. And I have prepared a PPT, but it is more sort of a theoretical aspect. So it will be better if we can make it interactive, because the GST Act is a lengthy act and there are several provisions. So to discuss each and every provisions will be very tedious, and not all of those are important. So here I will mainly be focusing on how to start business or how to get registered into GST, and what are the basic compliance one need to follow so that they can avail the benefits of GST. And I will start with the basic idea behind the GST Act, why it was brought and how it was brought. But I will be discussing some better provisions that will really be helpful for anyone who is just planning to start a business or who is already in business.
Saurav, your screen is visible. We can see the slides.
Hmm. Now, GST was introduced to upgrade from the previous tax regimes of sales tax, entry tax, excise duty, service tax, all those things. And all those acts were subsumed into one act that was called Goods and Services Tax. It is an indirect tax. It means the burden is not on the person directly, but it is indirectly charged from the customer. Secondly, it is a destination-based tax. It means that the tax will be charged at the final consumption point. Now, this slide will just give you the idea, means how much effort and work was done behind the scenes before implementation of the GST. It is just the idea was pitched, I think, in 2005 or 6 in the economic survey by the perhaps Manmohan Singh government or whoever was in party in power then. So it took around 10 years in making several committees, several hours of discussions, and finally it was implemented on 1st July 2017. Now, before GST Act, there was several different acts, all were governed by different acts. So it was very tedious for a businessman to comply with all those acts separately. Now, basically, tax was direct and indirect. Indirect, we had income tax, wealth tax, which are already there. In indirect, we had central tax, means the taxes which were imposed by the central government, like excise duty, service tax, custom duty, and the state tax like VAT was there, entry tax was there, luxury tax, entertainment tax, lottery tax, and many more. There were a list of around 22 taxes. So it was very difficult for any person to comply with all those acts separately, and also the focus was more on compliance, and the proprietor or the businessman had to spend a lot of time to comply with the provisions rather than focus on conducting his own business. Now, what were the limitations? Limitations in the previous regime of the service tax and VAT, there was cascading effect. It means tax was being taxed. Suppose any goods was manufactured at rupees 100 by a manufacturer. It was sold after imposing manufacturing or excise tax to suppose wholesaler. So if we assume that the rate of tax is 10%, then that manufacturer will sell to the wholesaler 110. Now, what a wholesaler will do, he will add his value and make some profit. So suppose he sells at 120 after value adding 10 rupees, and then he will again charge tax on 120 rupees. That will be the sales tax. Again, retailer will sell to consumer. So at each step, the tax was added to the purchase value. Then there was some value addition, and then further tax was imposed on sales tax or entry tax, whatever form of tax was imposed. So basically, the tax amount was also getting taxed. Later, this was rectified to some extent in the value added tax, which was just before GST. But still, there was certain areas where that cascading effect still remained. So tax was getting taxed. So that was sort of double burden. And since it is indirect tax, so the burden falls on the common person, and its effect is equally whether he's a rich person or a poor person. So that is why the basic thing with indirect tax is the burden is same, whether you are a rich person or the poor person. So it is necessary to rationalize indirect tax. Second limitations was that one has to take multiple registration. As I said, there were several acts governing the business. So one has to take registration in excise duty, one has to take registration in VAT Act, service tax, central excise. So there were several registration processes. There was no uniformity. Like in this slide, you can see in Maharashtra, there was no entry tax. But when some goods is getting entry into Gujarat, so Gujarat used to impose entry tax. So the goods in Gujarat will automatically be costlier than the goods sold in Maharashtra. Therefore, to bring the uniformity across the country, the idea of this GST, one nation, one tax, was introduced. Then there were some certain anomaly, like there were certain goods or service which were not classified particularly in goods or service, like license software in a CD. So it was difficult to identify whether it is a goods or a service. Similarly, sales of food in restaurant. So it was not categorically classified into a goods or a service. So there were certain confusion whether to treat them as goods or service. And if it was treated as goods, then it will be charged into VAT, sales tax, and if it is a service, then it will service tax will be imposed. So therefore, it was difficult for the previous tax regime in certain issues. So to overcome those things, the idea of one uniform tax of goods and services tax was implemented. Now, this gives you an idea of what were the taxes that were subsumed. Like in GST, there are three headings of the taxes. CGST is Central Goods Services Tax, SGST is State Goods and Services Tax, and IGST is Integrated Goods and Service Tax, which are imposed for interstate or union territory. Now, this is just information that central excise duty, service tax, surcharges, they were subsumed by the CGST, and the taxes which were previously imposed by the state government, like entertainment tax, luxury tax, entry tax, they were subsumed under SGST. And central sales tax, which was the tax imposed while interstate sale of purchase of goods, that was subsumed under IGST. Now, these are certain features. As we know that Goods and Services Tax Act is a constitutional amendment act. 101st Constitutional Amendment Act was passed through the Parliament, and this new regime was brought into execution. So these are simply facts, not that much important from the point of view of business. These are certain provisions like who will impose tax, who will collect the tax, and how the collected tax will be distributed between the state and the government. If there is a sale of goods from one state to another, then you have to impose IGST, that is Integrated Goods and Services Tax. If there is a sale of goods within states, like someone selling from, say, Gaya to Bihar Sharif, then there will be Central Goods Tax and State Goods Tax. That will be in two heads, CGST and SGST. and IGST is collected by the government, but it also gets distributed between the two states involved in the transaction. Now, currently, the petroleum products, high-speed diesel, motor spirit, diesel, petrol, they have been kept outside the purview of GST. But it can be brought into the GST regime once GST Council passes the decision. For the time being, they are outside the GST, and we usually see in the news that when the rate of diesel or petrol is hiked, it is the VAT that is affected. So the previous regime of VAT is still applicable on the petroleum products. Also, alcohol is outside the purview of GST. Alcohol can only be brought under the purview of GST after the Constitutional Amendment Act. Otherwise, state government has the sole authority to collect taxes related to alcohol. This just summarizes that. In certain sin products like tobacco and cigarettes, there are additional duties imposed by the central government, that is excise duty, that is specific to very particular products which are generally classified into sin goods. Now, the basic idea is GST is basically PAN based. When you observe a GST number, it is actually 16-digit number. The first 2 digit is the state code. Like for Bihar, it is 10. For UP, it is 09. For MP, it is 23. The next 10 digit is your PAN digit, the PAN number. If you are a proprietor, it will be the PAN number of the proprietor. If it is a company, then it will be the PAN number of the company registered on the PAN. And last 4 digit is random systemic generated number to make it unique. Now, these are simple. GSTN is the body which looks after the software behind it. Currently, Infosys manages the GSTN network, the GST portal, from both ends, like from our end or also from the business end. The means the portal from where one can file return, one can apply for registration, and all the compliances are done through GSTN portal, which is currently maintained by Infosys. Now, benefits in short, we can say that it reduces the cascading effects. Overall reduction in prices, but you can say it is somewhat debatable because certain prices have reduced, but in certain goods the rate of tax has been increased. So, but generally more number of products, there has been reduction in prices. Means the number of products whose tax rate has been reduced is more as compared to those products whose tax rate has gone high due to GST. Then there is common national market, means the rate is uniform across the country. The particular state does not have the say that in my state I will impose higher rate of tax, in other state I will impose lower rate of tax. So it is a common national market uniform tax rate. If the tax rate on suppose medicine is currently like 5%, then it will be remain on 5% whether you buy in Bihar, UP or anywhere in the country. Benefits to small taxpayers because they get the benefits of input tax credit, which we will be discussing in further slides. It is a self-regulating tax system, means you have to self-assess your tax, you have to declare your sales on the portal, and then accordingly you have to pay the taxes. Then it is non-intrusive electronic tax system, so it is completely in electronic mode. You have to file the return on the GST portal. There is no physical deposition of cash, deposition of tax through cash. All the transaction has to be done through online or through banking channel, be it UPI, NEFT, or at max you can deposit checks in the bank. It is simplified tax regime, reduction of multiplicity of taxes, but still we have certain 3-4 tax rates. Recently in the September, the government abolished two tax rates of 18 and 28 and reduced them to 18 and 5, but still there are still 3-4 tax slabs. Like for gold, it is 3%. For common consumption goods, it's 5%. For cement and iron, it is still 18%. It is consumption-based tax. As I said, that the tax will be levied on the final point where the final sale is happening. There the tax will be imposed. Abolition of central sales tax, the previous regime. Now exports has been zero rated, means the export in regime of GST is tax-free. There is no tax on exports. And it provides protection to domestic industry through interstate sales. Now, before we start with the
Saurabh,
practical, yeah.
just a small question. I mean,
Hmm.
from the benefits of a GST perspective, do we
Hmm.
have any data that supports that with the implementation of GST, we have seen economy boosted, or we have seen
The
since there is a reduction in the price and it reduces the overhead cost of the consumers. So do we have any data supporting that?
the rate of tax for most of the goods were reduced with the introduction of GST. Now, currently, you cannot compare since inflation comes also in calculation. But when it was
Okay.
imposed in 2017, like service tax at that time was 18%, and the lowest slab during GST was like 5%. So naturally, when the tax rate was reduced, the price was reduced. Also, the government has appointed a anti-profiteering unit for the initial 3 years to go and randomly check whether the reduction of tax rate has been actually provided to the consumers or not. Means there can be a situation like the price, the rate of tax has reduced, but the suppose the normal case came in case of restaurants, like the rate of tax was reduced to 5%, but
Mhm.
the restaurant owners what they did that they increased the basic price of the goods. The food item that were sold, they increased the price from say 100 to 120 or 130, and then they implemented the new tax rate of reduced tax rate. But overall impact wise, they kept the rate same. So to have a check on them, the government has appointed on the anti-profiteering unit, but to verify the efficiency of that body, that is subject to means ourselves. You cannot say with full certainty that it was means the rate was actually reduced or it was passed on to the consumer. But from what we say, the through the notifications and through the guidelines by the government, it was said that to reduce the rate. And most of the goods were reduced, like the branded companies or rates of like biscuit, water, and these things generally get reduced. To get a factual data for that, I will have to means need some
Okay.
time. I have not prepared that.
Okay. Okay. We can move ahead. Yeah. Yeah.
Now,
Thanks.
now before we start with the provisions, there are certain things which are classified neither as goods and nor as services. It means that GST is not implemented. These things are not come under GST. Like employer, that is basically salary. So salary is not part of GST. Similarly, services by any court or tribunal, functions performed by MP, MLA, panchayats, municipalities. Then funeral, burial, crematorium, these things, sale of land, GST is not implemented because they are neither classified as goods nor classified as services. And in the definition of the GST, goods and services tax, so that tax will be implemented whether it either on goods or services. But these things are classified neither as goods nor as services. Now,
Sorry,
to
Saurabh. For the sale of any properties or we see, I mean, we see the GST is imposed there.
no, sale of land, property. If you are purchasing a flat or apartment, then there is GST of 1% or 5%, depending whether it is commercial building or residential building.
So suppose if I am buying a plot anywhere in
Ah,
India, so
hmm.
I'll not have to pay anything on top of it. I mean, in terms of
No,
GST
you
or
will
any
have
other
to give
taxes,
a stamp duty, registry charges, but not GST.
what it adds up to in total.
It is different in different states, and in Bihar, I guess it is 8%, and for female, it is 1% less. So
Okay.
people generally prefer to get it registered in the name of females.
Okay.
Now, to actually take advantage of GST, the first thing is to get a registration under GST. To get a registration will give you a legal identity under goods and services tax. You will be a GST registered, means you will be a legal entity under GST. You will be authorized to collect tax. If you are not under GST, then you are not legally authorized to collect tax. So basically, once you get registered, that gives you the power to collect tax from your consumers. If you are not registered, you cannot issue tax invoice and collect taxes from your consumers. So GST, the moment you get registration certificate, it gives you authority to collect taxes on behalf of the government, and it becomes your duty to collect tax from the consumer and submit to the exchequer of the government through different returns. Now, who must register? The threshold limit to get registration for in case you are involved in business of goods, means you are selling goods, then the threshold limit is 40 lakhs annually. And if you deal in the business of services like coaching institutes, gym, restaurants, then the threshold limit is 20 lakhs. Now, if you are doing interstate trade, suppose one is selling goods from Bihar to Jharkhand or Bihar to UP, then he must take registration. An unregistered person cannot do transaction across states. And thirdly, the e-commerce business means if you are willing to sell goods through Amazon, Flipkart, or any other Zomato, Swiggy, then GST registration is mandatory. And in case of e-commerce, the means naturally when you will try to register on Amazon as a seller, then they will naturally ask you for a GST number. So there the compliance becomes more easier. Now, how to get the registration? First of all, the registration process is completely free. If somebody means ask for money or charges, then it is means generally the advocates or the CS, they can ask for money, but that then consider that as their fees. But through GST portal, the registration process is completely free. There is no charges. Now, first of all, the website is gst.gov.in. You can go there and log in using your basic details. PAN and Aadhaar is mandatory. So you register with your PAN number. You have to submit basic documents like your PAN, your Aadhaar, the place of business. You have to specify where is your business place, means where you are opening the shop or whether you are opening a go down or whatever. You have to specify where will be your principal place of business. If suppose you have 2-3 business places or go downs, then you have to mention where your additional places of businesses are. Once you submit your basic detail, login detail, then you will get a reference number and you will also get to know in which office your registration application is pending. It does not mean that it will be pending in physical form. It is all electronically and you can trace it. Then from the officer's end, they will take a visit to your business place to verify whether you are a genuine business. They will analyze the place from where you are willing to start a business and also verify the documents uploaded by you on the portal. And once it is verified, you will get a GSTN certificate, registration certificate. And the moment you get the registration certificate, it is your duty as well as your obligation to collect taxes on behalf of the government for every sale which you are doing after getting GST registration. Now, whatever I said, I have written in that form. If liable for registration, you need to require to obtain registration within 30 days. It means, suppose I mentioned earlier that the threshold limit, say for goods, is 40 lakhs annually. Now, before the start of the financial year, you might not know whether you will cross the turnover of 40 lakhs. So, suppose in the month of September or October, you realize that for this financial year, you have crossed the sale of 40 lakhs. So the moment you realize that your threshold is crossing 40 lakhs, it is your duty to apply for the GST registration. And when you get the registration, so from the date of application to getting the GST registration, ideally the maximum days required is 7 days. So once you get the registration, you have to declare the sale from the day you cross the threshold limit, like 40 lakhs. And after that, you have to start collecting tax and depositing it to the government. Now, PAN is must for GST. As I said that GST is a 16-digit number where 10 digits is your PAN number as it is. Other documents, as I said, it is Aadhaar, electricity bill or rent agreement is just to verify the principal place of business, whether it is actually in your name or not. If suppose it is a rented property, then you have to provide the rent agreement that you have the permission to start a business at that rented property. Bank details, that is to, in case you have some refund issues, then you have to must deposit the bank details. And most of the things get verified from that Aadhaar link OTP.
So, Saurav, I have a question here. So, given the fact that
Sorry,
India
GST
is,
50.
yeah, sorry. So, as we know that India is heavily reliant on unorganized sector, meaning unorganized businesses, where the transaction failed to cross the 40 lakh per year. So don't you
Mhm.
think the overall tax collection is impacted and government is unable to collect as much as it could have done
No,
otherwise?
consider it similar to income tax. Like in income tax, if your annual income is less than say 5 lakh, then you are exempted. You need not file means you don't have to pay tax as you are within the exempted limit. Similarly, for a smaller businessman, say turnover is 20 lakhs. So in a monthly basis, if you calculate, it is hardly 1.5 lakhs. And you will have to spend a decent amount for compliance with GST. It is not easy for, say, a small businessman to comply with all the provisions of this GST Act. For example, say you have a Kirana store nearby your house, and
Right.
his turnover might be 10 lakhs, 15 lakhs as they sell there. But if they have to comply with GST, then they will have to file monthly return. They may have to hire a tax practitioner or a chartered accountant to maintain their account. And then there are chances of some discrepancies, and then they might get issued notice from the. So to avoid
Okay.
such complications, the smaller businessmen, they have been kept out so that they can conduct their business without any fear of this. And yes,
So
there are
how
certain cases where. Mhm.
yeah, so how government keep an eye on this 40 lakh unit? It is very easy
that
to,
that
yeah.
that that is not practically feasible. It is, say, you can say it is trial and error. After some experience by seeing on the size of the means shop or the go down, or by seeing the crowd that gathers on the shop, we get a rough idea, and based on that, or
Right.
sometimes there are complaints from nearby that he is having a greater transaction and is still not paying taxes. So in that case, we have to go there and we do the physical
Okay.
verification. We take take a note of their stock and then evaluate whether his turnover was more than 40 lakhs or not. But it is not possible to conduct raids on all the smaller units. But monthly, 1 or 2 units we try to verify, and most of the times it is voluntarily. We don't need to go and raid them, but just by giving a hint that it appears that you are crossing the threshold limit, so kindly get yourself registered. And most of the time they compliance if that turnover is actually more than the threshold limit.
One follow-up
Now,
question here. Suppose
mm, mm,
if it crosses by a few lakhs or just
mm,
crosses, so
mm.
do the business I mean do they have to pay for entire 45 lakh or 50 lakh, or
Yes, yes, yes.
it is
Yes,
exempted until,
the
yeah,
moment you crossed 40 lakhs, it means you have come under GST registration. And once you have got the registration certificate, it is your duty to collect tax on each and every sale. Unless
okay,
it is exempted sale, means whatever taxable goods you are selling, you have to collect tax on behalf of the government. And then
okay, meaning it
you
is
are
not
just
exempted until 40. Yeah, it is not exempted under 40. You have to pay
no,
for all
no.
the products that
Yes,
are
yes.
sold. Yep. Yep. Okay,
Same
okay.
as income tax, exempted
Yep.
till 5 lakhs. Once you cross 5 lakhs, then it.
Right, right. Yeah.
Now, in recent times, the physical verification cases have increased because in the initial year, the implementation of GST was not very effective because there were lots of changes and new things were coming up daily. And there came certain instances where GST Act was being misused. And to overcome that, in recent times, physical verification of premises have increased. It means in most of the times when you apply for the GST registration, there are high chances then some officer from the GST will come and visit your place to actually verify whether you are conducting a business physically or you are just conducting on paper for some dubious reasons. Now it has become mandatory for every GST registered person to uh, display the GST number on their shop. And I think when we visit, it is a common sight to see the GST number registered on the displayed on the board or hoarding of their shop. It is just to differentiate between the registered person and the unregistered person. Although 100% compliance is not there, but most of the taxpayers who have got the GST certificate, they have to display it on their shop. Now, certain registration details, it is naturally that it can be amended. Say your rent agreement has expired and you have to shift to a new place, then you can amend the registration detail and give it your new place of business. Sometimes you have to change your phone number, address, anything. So these things can be changed later on. Now, registration is required. Say one person is trying to conduct business in different states, then you have to take registration in each different states based on the same PAN. But suppose you have to conduct business in Maharashtra and Gujarat, then you will have to take two separate registration, one in the state of Maharashtra, one in the state of Gujarat. With the registration in Maharashtra, you can conduct business in Maharashtra and similarly in Gujarat. Also, within one state, you can take multiple registration based on your PAN. Suppose you want to conduct 3-4 different businesses. So either you can conduct those businesses using only one GST number, or if you want to differentiate those verticals, then you can take different GST number based on the same PAN. This is the same thing, that threshold limit for special category states like in northeastern states and smaller states, that threshold limit has been reduced to 10 lakhs in mainly northeastern states. Now, there are certain cases when you have to take registration mandatorily. As I mentioned earlier also, if you are doing interstate supply from one state to another, then you have to take registration compulsorily. Similarly, e-commerce, if you have to sell something through e-commerce platform, you have to take that. Person supplying goods through e-commerce operator, person making supplies on behalf of a registered input service. These are just categories where you have to take registration mandatorily irrespective of your threshold limit. Now, registration to be granted state-wise, PAN is mandatory. Separate registration permitted for multiple business verticals in a state. Now, once you have got GST registration for all the taxable supply, you have to issue tax invoice. Now, what is tax invoice is basically the bill we take, but they have to mention that it is a taxable supply, tax invoice. They have to write what goods they are supplying. Then there is a HSN code. HSN code is a code given to all the types of goods and services that are means that can be bought and sold. And the idea of HSN is governed by World Customs Organization. So it is a internationally recognized HSN code. It is generally 8-digit code given to different items. So you have to mention their HSN code. It is mainly important to differentiate between two similar products. Like suppose someone is supplying wooden material. So wood is either raw, wood is finished, whether wood is bamboo. So these things cannot be differentiated just by seeing the description of the goods. So HSN code, it actually differentiates between the different similar products. So it is necessary to mention HSN code to provide a specificity to a particular goods. Now you have to break down between what is the taxable amount and what is the rate of tax that you are charging. And finally, the total calculation. So that is the format of GST tax invoice. And it is common when we purchase anything from mainly from online like Amazon. There you can see that it is in the similar form. Nature of description of the goods. They mention HSN. They mention the taxable supply and at what tax it falls. So they charge the tax at same rate. And finally, the final amount. Now, this is just to show intra-state. If there is a supply of goods from within the state, one district to another district within same state, then you have to charge CGST and SGST. And if you are supplying outside the state, then you have to charge IGST. So basically, suppose you are selling a goods of 100 rupees and rate of tax is at 12%. So what will happen if you are selling within the state, then you will charge 6% CGST and 6% SGST. So final growth means final structure will be 100 rupees taxable value, 6% CGST, 6% SGST, total 112 rupees. And if you are selling interstate, like from one state to another, then you will charge IGST at 12%. So the final price will be the same, as the idea is to bring uniformity across the country, but the head of the tax will be different. Now, why this head is important? Say, suppose you have charged tax under CGST, SGST. So the CGST component goes to the central government, SGST component comes to the state government. In case of IGST, the 50% goes to the one estate and the other 50% goes to the other estate. The two estates, those are involved in transaction. Now, the most important thing of GST is the ITC, input tax credit. Now, the idea of input tax credit is what makes it avoid the cascading effect that we talked was prevalent in the previous tax regime. So what happens in input tax credit? Like suppose you purchased the goods of 100 rupees and the tax rate was say 12%. So you purchased from say manufacturer, you have to pay him 100 rupees for goods and 12 rupees for tax. So you bought that for 112 rupees. Now you added some value, say you are selling this 112 rupees goods at 120 rupees. Tax rate is same because the product is same. Now 120 rupees you will charge 12%. So the final value will be 144. 144, huh? And what happens is when you gave the tax while purchasing from manufacturer, you purchased the goods of 100 rupees at 112 including tax. So this 12 rupees gets credited into your ledger. The tax you paid while purchasing, that gets deposited into your ledger as input tax credit. And this credit is as good as cash for you because you can discharge your tax liability using this input tax credit. So this gets adjusted, and when you have to pay tax, say 144, your cost was 120 rupees, so 24 rupees was tax that you collected. So you can adjust 14 rupees from the ledger, from the input tax credit which was into your ledger, and you have to pay extra 10 rupees from your pocket. So basically you are getting the benefit of the tax paid in the previous stages. I think I am clear, and if you have doubt, we can repeat this. So say collected on sales and paid on purchase. This example is what it is trying to convey. Like while you purchase something, you paid a tax of 5,000 rupees. So this will come into your ledger in the form of ITC. And naturally, when you will be selling goods, so it will be higher than that because you have to make some profit and you will be doing some value addition. So you are selling at 8,000, but actually that 3,000 is what you have to pay because 5,000, the tax you paid while purchasing, that has been reversed to you in the form of ITC in your ledger. And this is based on invoice. What happens is when the supplier declares that he has made a sale to you, to GST registered person, then that ledger, tax you paid will be deposited in your ledger in the form of ITC. Now, one point what you were asking, the person who are unregistered, they will not get any such benefits because they are not GST registered, so they will not get the benefit of this input tax credit. So whatever tax they paid while purchasing goods, that is not getting reversed to them, and so they have to bear some extra burden. So if someone is getting registered under GST, he has certain benefits that is in the form of ITC, the purchase tax, the tax on purchase, whatever he is paying, that gets reversed to him and actual liability gets reduced because he can settle that using ITC. Now, certain ITC is not allowed, means ITC will be allowed only for those transactions which are used for the furtherance of business. Suppose you are a GST registered person and you are purchasing certain goods for personal consumption, then those ITC will not be allowed. But practically most of the businessmen, they naturally avail that because they get even the personal purchase in the name of their firm. And the moment they purchase certain things in the name of their firm, the tax they paid on purchase, that naturally gets deposited in their ledger. Although it was not for them to avail, but it gets credited into their ledger, and now it is for officers to verify whether he has actually taken the eligible ITC or whether they have taken the fraudulent ITC. So basically ITC for like personal vehicles, they are not allowed. And ITC is available only when you have that invoice and tax has been deposited on that. Then there are certain restrictions. You cannot avail ITC related to all the purchases. Like I said, it has to be related to your business, your nature of business. the purchases you are making for your personal consumptions, like buying a fridge or TV or laptop for personal consumption, ITC related to that is not eligible. Although you can take it in your ledger, but if verified, then you will have to reverse it along with interest and penalty. Now, this is just a sequence to give you an idea of how to settle your tax liability using ITC. So if you have to make payment into SGST, then first you have to set off through IGST, ITC, and then SGST. So basically first IGST is to be used, then SGST, and then finally CGST. It might seem complicated for those who are not involved in the business, but it is very simple. It is just like cashback we get in Amazon or Paytm wallet. So similarly, the moment you make a purchase and make payment, that gets deposited in your wallet, and that is as good as cash while settling your tax liability. Now comes the compliance issue, how to file the GST returns. Now suppose you have made sale in a month and GST returns are to be filed monthly. Normally, this has to be filed monthly. So this is month of May. Suppose during the month of April, you have made certain sales. So there are 2-3 forms which needs to be filled. First of all, on the 10th of the next month, I mean the sale that you have made during the month of April, you have to give a summary of that through GSTR1 form by 10th of May, where you will declare that during the month of April, I have made this sale of this goods. So you have to basically make entry that I have made sale of say 1 lakh rupees during the month of April. Out of 1 lakh, say 10,000 is of 5%, 20,000 is of 12%, and remaining is of say 18%. So by the 10th of, you have to declare your supply that you made during the month of April. Now, the moment you file GSTR1, as I said, the ITC is passed on to the recipient. In case I am considering a supplier, the moment you file that I have made this supply on by 10th of the next month, the recipient will get the input tax credit, and the day to actually file pay the tax is 20th of the next month. So for the month of April, you have to file your GST return, that is GSTR 3B, on 20th of May. So now on the 10th of May, you have got the input tax credit for the purchases that you have made. And while filing GSTR 3B, you can actually use that ITC to discharge your tax liability and any additional liability that you have to make using your cash payment. So every sale that you made during the purchase, you first declare on the 10th of next month in the form GSTR1, and on 20th of the next month that you file GSTR 3B and make actual payment of tax. Now GSTR 9 is annual, that is to file the annual return for the whole financial year. And for filing GSTR 9, you have the deadline of 31st December of the that financial year. Annual return is basically summarizing the annual turnover, annual sale, annual purchase. All those things are get declared in the annual return. And first and final return. First return is the return you file after getting GST registration, and final return is say you are closing your business for some reasons. Then you submit the final return that this is my closure of business and this is my end of the final full and final settlement of all the taxes, purchase, sale, ITC, etc. Now, there are 2 forms of ledger. Means the moment you get your GST registration, you get a user ID and password, and there you can see that you have 2 ledgers. Electronic credit ledger, it keeps an account of input tax credit, the ITC, that I said that the tax you pay on purchase that gets credited into electronic credit ledger, and electronic cash ledger is just as any wallet, you deposit cash to discharge certain tax liability which cannot be settled using ITC, or suppose you have already exhausted all your ITC, then you need to pay tax through cash. Now, e-way bills and logistics. Now, this is one additional compliance issue. Say you are purchasing or selling goods and the goods is in movement. Suppose you are purchasing a goods, you are bringing say textile items from Gujarat, and it will naturally take 2-3 days to come from Gujarat to say Bihar. In that case, once the goods is loaded on the truck or any vehicle, there you have to generate a e-way bill. E-way bill is a similar portal where you just simply provide detail of the invoice related to the goods being loaded on the truck and from where to where you are sending and for how long it will take. So what happens is the moment you generate e-way bill, it means your purchase or sale, whatever you are doing, that gets accounted. And in that case, no officer or no one will catch you in the midway while checking. But if you are not having invoice and you are not having e-way bill, then any tax officer across all the states you are crossing, they can confiscate your goods along with truck and then they will charge you penalty. Because it is mandatory to generate e-way bill if your interstate purchase or sale is of rupees 50,000 and within a state it is the threshold limit is 1 lakh. Once the goods being transported crosses the threshold limit, you have to generate this e-way bill, which is nothing. You just have to declare that this much amount of goods is being transported from this place to this place. That is all that e-way bill requires. Now the composition scheme. It is one special arrangement made for smaller taxpayers. Smaller taxpayers means those taxpayers whose business turnover is between 40 lakhs to 1.5 crores. 40 lakhs is the threshold limit. Less than 40 lakhs, you don't need registration. But once you cross 40 lakhs, you need GST registration. But for smaller taxpayers whose turnover is not more than 1.5 crore, the government has made a special arrangement to reduce the compliance issue. Now, what is this? In composition scheme, there is a flat tax rate of 1%. There is no separate tax bracket. You just have to pay 1% of your turnover as tax, but you will not get any benefit of the input tax credit. That is the main idea behind composition scheme. Now, advantages: it has lower flat tax rates and minimal compliance paperwork. Excellent for local traders, basic restaurants, and highly localized products. Basically, for those whose turnover is not very large, whose business is not very large, so to reduce their compliance and the input tax credit, the matching of that input tax credit, it can get tedious at times. So to avoid such complications for smaller taxpayers, they have introduced this composition scheme. Now, what are the features? This scheme is available to those whose turnover of supply of goods in a financial year does not exceed 1.5 crore. It is also based on PAN. They have to get the GST registration based on the same PAN. This scheme is optional. It is not mandatory. So if your turnover is more than 40 lakhs, less than 1.5 crore, but you still want to practice as a regular GST registered taxpayer, you can practice that. It is only optional. This optional will lapse the moment you cross the threshold limit of 1.5 crore. The moment your threshold turnover crosses 1.5 crore, then you will have to get back to regular means taxpayer. You cannot avail the benefit of this composition scheme. There are very less compliances. The quarterly, you have to file return quarterly, not monthly. But you will not get ITC and you don't get the right to collect tax. Basically, you cannot collect tax once you are in the composition scheme. So basically, you just have to pay tax at 1% of your turnover in cash through your own pocket. Because you are not collecting tax, so you will have to pay tax. And since you cannot avail ITC, so this tax has to be paid through cash.
Saurav, there is
Now
a question from Ritesh in the chat. Do you want to cover it now or we can take it later once you are finished with all the
I am
slides?
not able to see the question where it is. Chat.
In the chat, you can find it.
Why should not governments adopt a uniform GST system given such as greater administrative simplicity, lower compliance, enforcement for reduced market return consumption tax, and the ability to maintain a broader tax base that allows for lower? Ritesh, regarding your question, the idea behind GST is to make it uniform. Currently, there are 4 or 5 tax slabs, but the vision of government is to bring it down to just one tax slab. That will be just one tax rate and it has to be in the lower bracket, single digit tax rate. But what happens is the geo-economic condition of the country is not uniform. So when the idea of GST was being discussed, the developed states, particularly Tamil Nadu and Maharashtra, so they are manufacturing lots of goods, yeah, majority of the products, and so they were getting better taxes in the form of excise and entry taxes and all those taxes. And in Bihar and like poorer states, there was only consumption-based taxes. So we were not manufacturing, we were only consuming. So what happens when the idea of GST was being discussed, so they were initially opposed, Maharashtra and Tamil Nadu, that why GST is a consumption-based and destination-based. So they said, we will be manufacturing goods, but tax will be collected in Bihar because they will be consuming things. So to compensate that, the government has made a promise of compensating those states for 5 years at 14%. But it has to be uniform gradually. Once the uniformity comes across the country or the disparity reduces a bit, then maybe someday, not practically feasible now, because if someone is getting benefit, the other states will say that we are having a loss, or someone else is getting benefited on our behalf. The major business is done by us and someone else is getting benefit. But idea is to bring that uniformity, to bring one rate, reduced rate, so that the exchequer of government is also not affected and burden on the people is very less and tax rate is uniform.
Thanks, Saurav. Clear.
Now this composition scheme, there are just 1%, 2% rates. And to keep a track of this rate is very difficult because these rates are getting changed in every GST council. Some products rate will increase, some will decrease. So it is very difficult to keep a track of it. And in composition scheme, the limitation is that you cannot make interstate supply. You have to do it within a state. So basically it is for a smaller taxpayer, a special optional scheme. If it suits your business, then you can adopt it. Otherwise, it is better to go for the regular thing. Now there are certain things, concept of RCM is basically reverse charge mechanism. In certain cases, what happens is tax is to be paid for taking service of advocate. In that case, what happens is ideally advocate should raise a bill and you will be paying him money. Suppose you advocate provided you a service of rupees, say 100 rupees. So ideally it should be like an advocate will give you a bill saying that 100 rupees is my charge and this is the GST rate for providing service. But in case of advocate, in case of certain notified goods and services, what happens is tax will be beared by the recipient of the services. So I am taking service of an advocate and tax will be paid by me, not by the advocate. That is for certain notified goods. The idea is why, because say the advocate is providing service and advocate may not need registration under GST because his threshold limit is less than 20 lakhs in case of service. But certain notified goods, government has said in that case, tax has to be paid by the recipient of the service. But that list is very small. Like the one prominent sector is GTA, Goods Transport Agency, the transporting agencies which are involved in say transportation of goods for the taxpayers. In that case, what happens is tax, say I am a businessman, I am selling goods from say Bihar to Jharkhand. I will take service from some transport agency. The transport agency is providing service. He will have to charge tax. But in that case, what happens is I am taking service of transport agency. So I will have to pay tax under reverse charge mechanism and that transport agency will not pay tax. But that is for the list is very small. One is advocate and one is goods transport agency. That is mainly covered under RCM. Now refund of GST, refund is basically for those, say you have deposited cash in your ledger by mistake, or say you deposited more amount than required. So in that case, you can ask for refund. Now there are only two cases where you can get refund of input tax credit that I discussed. The input tax credit gets credited in your ledger. So if you are doing export or if you are in the business of inverted duty structure. Now what is inverted duty structure? Inverted duty structure is the case where you are buying raw material at a higher rate and you are selling product at a lower rate. For example, in case of agarbatti, what happens is you are purchasing perfume at the rate of 18%, but you are selling that agarbatti at the rate of 5%. So naturally, you will get a lot of input tax credit deposited in your ledger because you are purchasing at a rate of 18%. So you are getting 18 rupees for 100 rupees in your ledger. And when you have to pay tax, you have to pay only 5 rupees. So for one individual, say for 100 rupees of sale of agarbatti, 13 rupees is getting deposited on your ledger extra, which you cannot use because you don't have tax liability. So in that case, government has made provision of refund. So you can get that refund of say 13 rupees for 100 rupees by applying on GST portal, and you have to say that I am involved in the business of inverted duty. My raw material is costlier and my final product is cheaper. So that input is getting deposited unnecessarily, which I need to reverse. And also refund is applicable in the case of export. Now these are basic practical compliance. Just you have to file the returns on time. The due date is 10th of next month for GSTR1 for declaring your supply, and 20th of next month for actual payment of tax. Now, if you delay it, then you have to pay interest and penalty that is system generated, so you cannot avoid that at any cost continuously. In that case, your GST registration will be suspended. You will be issued a notice to finally comply with your GST liability, and once you pay the actual payment of tax, then your registration will get activated again. Now, if your turnover is say more than 5 crore, then you have to get your firm audited. You have to get your annual turnover and all those things certified from CA, balance sheet, PL accounts, all those things. Now, these are the basic question answer. Most common doubts, like is GST compulsory for every businessman? So no. Small businesses whose threshold limit is say less than 40 lakhs per annum for goods and less than 20 lakhs per annum for services, they don't need GST registration. Can I do business without GST? Yes, if your threshold limit is less than that, or if you does not fall under category of mandatory registration. Can I have multiple GST registration? Of course, within a state also you can have multiple registration. And if you are involved in more than one state, then compulsorily you have to take registration in each of the different states. And for that, just for fun, if you want, say you go to any restaurants like Domino's or KFC, in the invoice you will get the GST number. So you can normally check on gst.gov.in. You can search by GSTN number or search by PAN, whatever suits you. And you can have a fair idea about the business, what is his nature of business, where it is registered, where it is the principal place of business, what is the date of his registration. Perhaps they also have their phone number of the owner or whatever, although that is not of use. But just for example, say you are going at a restaurant and he is registered under composition scheme and he is still charging you tax. And it happens because by mistake or knowingly. So, or you can say someone's GST number is suspended because he has not complied and he's asking, he's collecting tax. In that case, you can object there only by verifying on gst.gov.in. You just have to type the GST number and they will give you the idea. And you can say if GST number is suspended, you don't need to pay tax. Suppose he is registered under composition scheme, then also you don't have to pay tax. So in that case, if someone is charging you, and it actually happens, it is very common, even I have faced it in Patna, where many restaurants or even tax rate, they charge differently. If someone is in composition scheme, they have to charge 1%. They may charge you 5% and thinking that he's a regular taxpayer. So these things are practical hacks. If you just for fun, if you want to see whether you are paying the GST at right rate and or not. Now, what happens if I do not register when required? Then obviously either physical verification of your business place can be conducted, or you can be issued a notice that it appears that your turnover is more than the threshold limit. So you may have to pay interest, penalty, and whatever tax liability has arisen. Can salaried persons take GST registration? Yes, anyone who is involved in business activity can take GST registration. There is no other criteria. You just have to have PAN, Aadhaar, and you have to furnish detail of the principal place of business where you are conducting business. Now the doubts related to ITC and invoice. Can I claim ITC on personal purchases? That I have categorically mentioned that no, ITC is allowed only for business related expenses. If you are purchasing something for personal consumption, then that will not be allowed. Although you will get that into your ledger, but if someone checks it and verifies it, then you will have to reverse it along with interest. What if supplier does not file return? In that case, what this question means is, suppose the supplier has not filed that GSTR1 on the 10th of the next month, or suppose he has not mentioned your GST number, or suppose he has by mistake mentioned someone else's GST number, then in that case, that ITC will not get credited into your ledger. Can ITC be claimed without invoice? No. Invoice is mandatory, because once invoice is generated, then only it is assumed that you are paying tax to that person on purchase, and that tax amount is only getting credited into your ledger. Can GST paid on hotel or food bills be claimed? Sometimes yes, because if suppose there is a business visit, then some say higher authorities have come to your place related to your business, and you are making arrangements for their hotels and food, then you can avail, since it is related to business. So there is not means hard and fast demarcation that ITC of this will be allowed and this will not be allowed. Suppose you have bought a phone. Now a mobile phone is used for personal consumption also, and it can be used for business purposes also. You will not have a separate phone that I will call business purposes from this phone and personal from this phone. So there are some vagueness. ITC of that can be allowed since you are using that phone for business purposes also. Similarly, with hotels and food bills, if you can suggest that it is related to business, then it will be allowed. Now, doubts related to returns and payments. What happens if GST return is filed late? Then you will be charged interest and late fee. Can nil return be skipped? No. Even say your business was completely shut down for a month, then also you have to file return. You will file nil return, zero return, that you have not made any sale or but filing return is compulsory. It is easier to file nil return. You can file it using SMS. You can file it through portal anywhere. But nil return cannot be skipped. You have to file it. What if customer has not paid me, but GST is due? It is your duty to collect tax. The moment you are issued GST registration certificate, the burden is on you to collect tax on the behalf of government and deposit it to the government. You are just a mediator. You don't have to pay tax from your own pocket. You have to collect it from the consumer, and then that collected tax has to be paid to the government. But it is your duty to collect tax. Can excess GST paid be adjusted? Yes. Suppose you have filed some, there can be mistakes, clerical mistakes, or sometimes turnover is, say you have mistakenly taken this bill to next month, previous bill to previous bill. So these things are minor issues, they can be adjusted. Can GST returns be revised? Direct revision is not allowed. What happens is, since you have filled this return for say month, then you can revise it in the month of May. When you will filing the next return, there you can say that in the previous month, say 2 invoices were wrongly mentioned, which was not related to my sale, or say value was different or rate was different. So you can rectify it in the next return. Now these are practical business issues. So should a small businessman maintain record digitally? Nowadays, maintaining record digitally means, I will say, better. It is safer. It is durable. Physical way keeping it will be tedious, plus lots of paperwork. So it is easy to maintain digitally. There are softwares like Tally, SAP, where they maintain those records.
Saurav, there is
How
a
long
question
should
from, sorry to interrupt you. There is a question from Subham from our batch. It is there in the chat, and it is related to online businesses. So can you just
What
check and
about
look, give
online
us?
businesses that provide digital offering services or goods across states? Registration to be done at location state. What about online businesses that provide digital offerings, services, goods across states? Now, registration has to be taken in that state where your principal place of business is located. For example, Make My Trip, it is registered in Gurgaon, Haryana, because there the office of Make My Trip is in Haryana. Now, what happens is, suppose if you are a registered person and making a booking on Make My Trip, so there you will mention your GST number. So if your GST number is say from Karnataka, then it will be an interstate supply for Make My Trip. His place of business is Gurgaon and he is providing service to someone from Karnataka. So taking registration is mandatory in case of services. For goods, wherever you are keeping your goods, say Blinkit, they have to take registration across all the states differently. Blinkit from Bihar, they cannot supply goods to say UP or this. They have to take separate registration. In case of services, because they don't need to have physical presence across different states, so wherever their headquarters is or wherever they have declared their principal place of business, they have to take the registration there. Or
But
optionally take.
but sort of regardless of the places where they register, I mean, it attracts equal tax, right? I mean, be it okay.
Yes,
So
yes,
so
rate
it
of
does
tax
not
is same.
okay.
Whether you are booking ticket from Mumbai or I am booking ticket from say Gaya, the rate of tax will be same. The only the
Right.
head will be different. Say you are booking within the state, then they will charge you CGST, SGST. And if I am
Right.
outside
Right.
the state, they will be charging IGST, but overall rate is same.
Overall, it adds up to the same. Yeah.
Yes, yes. And taking registration, as far as question from Kumar Shubham is concerned, they have to take registration where their principal place of business is located. And optionally, they can take registration across all the states if their business is located in all the states. Now, GST records needs to be kept for 6 years. This is important. Whatever, say, you are conducting business in financial year 25-26, then that record has to be kept for the upcoming 6 years. Then only you can destroy it, or you can, till 6 years, anyone can ask you to provide any, say, invoice, detail, anything. So it is better to keep it in digital form. Now, this is all from my end. If you guys have any question, you can ask anything.
I see Mausam Kumar raised his hand. Let me see if there is any question from him. Hi, Mausam. Mausam, we can't hear you.
You are mute.
You are on mute. Yep.
Sorry about that. Sauravda and Amit, that's so great to see you. As a matter of fact, I've known Sauravda since the first day of school. We were in the same dham, Sardhanan dham, right? And so it's so great to see you. As a matter of fact, I got up 7 a.m. to just be a part of this. And I have a couple of questions. I mean, mostly I think most of that has been touched on, but I wanted to understand from you, if you think of the structure of industrial activity in Bihar, as a state like Bihar, there's a lot of informality, right? And one of the paths of GST is to sort of push this informality away towards the direction of formal firms, right? And this idea that GST would lead to this, I wanted to understand from you, how much of a pushback do you see from firms when it comes to this push towards formality? In the sense that when you try to find firms to become a part of the structure, do you see a pushback from firms saying that, hey, we want to be a part of this the way it was happening before? And how do you negotiate that? Like, if firms are not able to be a part of this, the compliance issue, I mean, even if their whole corpus is limited in the sense that their tax requirements may be low, but they may still be required to be a part of that, because that would give you good data in the sense that you would be able to understand which firms are formal, how many people they're employing, and what is leading to that sort of an overall economic activity, right? And so I wanted to understand your insights from that. The second question which I had was about, because GST is such a center-heavy tax architecture, how do you think this has impacted the ability of states to be a part of the tax architecture itself? In the sense that if some states like Bihar, for instance, last time I checked the data, about 70% of all tax devolutions, not tax devolution, the fiscal space, the amount of money that Bihar has, the budget, as a matter of fact, comes from center and the pool of taxes and grants, right? And so for a state like Bihar, it's very, very difficult to, I mean, not difficult in the sense that there's not incentive enough to kind of move away from that, which is that you are dependent on the center for the kind of money you're getting, right? And so what do you think a state like Bihar needs to do, which is to create its own architecture of tax devolution in a way that you can have capacity to tax beyond the GST, right? Which is that you can then have municipal tax, property tax, sales tax, bunch of other taxes. And that would lead you to deploy that money to use for development in the state, right? And so, yeah, these were my two big questions, and not questions, just wanted to understand your insights on that. Yeah. Thank you, Dada.
Good to see you, Mosam, too. And
Thank
your
you, Dada.
questions are very valid and very relevant as far as Bihar is concerned. Now, first of all, to talk about the collection of GST from Bihar state is one of the poorest. And that follows your next question, since the collection is poor, so naturally the dependence on the center will be high anytime. Now, what is there in case of Bihar? There is only one big commercial center, that is Patna. Apart from Patna, the major bigger districts say Muzaffarpur, Gaya, Bhagalpur, but there is no such bigger commercial activities. They are mostly traders. As in case of traders, what happens is, what they are doing is they are using that input tax credit to settle their tax liability. And it is very simple for them to say that we have particular amount of stock with ourselves, so, and we are not adding any value, so we don't need to pay cash for the tax. One thing is that. Second thing, which is very common, the rural-urban divide in Bihar is way too much. In our cases, like we, within a year, hardly scrutinize 50 to 60 taxpayer in a district. That is our limitations, because say in Gaya, it is one of the larger districts of Bihar. We are only 4 or 5 people here. So you cannot have, means what, we are not able to scrutinize or audit lot number of taxpayers. We are repeatedly catching only selected those 4-5 sectors, like automobile, because you cannot hide your big showrooms, or the popular, say, cloth market, or the branded thing. But the majority, or I don't know if you have seen the crowded markets or the traditional markets, like in Muzaffarpur, there is Saraiyaganj. In Gaya, there are GB Road. Means they are coming from generations, but they are largely still unorganized. And even if they have taken GST registration, they are not declaring on in paper. Now, why they are not declaring it on paper? Because once they show the sale in GST, they will also have to comply with income tax. Because if you are saying sale, then naturally you will have some profit, and then you have tax. Third thing what they are doing is, in normal practice, what happens is, a business tries to grow from small to medium to large. Here what happens is, one businessman, say he has a normal kirana store. He is opening a kirana store. The moment he comes in, say, light, and he knows that someone is watching or someone will complain, the moment my threshold limit is crossing for the GST registration, what happens is, he opens a second shop in the name of his brother, his son, his wife, anyone. So they are not focusing on making one business go from a small to medium to large. Just to avoid tax, they are opening parallel shops. So that is also affecting the tax. And in the rural area, people are still not aware of that. The basic idea, in layman idea, it appears that the shopkeeper thinks that he has to pay tax, but actually he has to collect tax and pay to the government. He's just a mediator. But once that cash comes into his hand, he thinks it is his money, and it is not easy for him to release that money to government's exchequer. So the collection.
Just to sort of push back on that, do you have any data on the number of firms which are sort of informal? Like, at least like internally, do you create a database where you think of like,
We have
okay,
the
these
data
are
of formal. I cannot say about the informal. Like in the state of Gaya, total of 3,000 taxpayers are registered in a state and 3,000 in center. So around 6,000 taxpayers are there. who are
Mhm,
GST registered in the district of Gaya.
mhm,
But
mhm,
if you see, there are 11, 12 blocks within Gaya, and across, I mean, there are practically big cement shops, iron and steel shops. They are the sole distributor in the rural areas, but
mhm,
they are outside the purview because we are not going into that area to verify or to
mhm.
know. If we get some complaints,
Yeah.
then we go there and make them comply. But normally they are.
Mhm. Yeah, I think this is a industrial structure problem, which I think is much deeper than GST. I'm pretty sure. I mean, what I understand from you is that there's a political economy to this, which has to be addressed beyond this tax structure. And this informality cannot be addressed without simply saying that, hey, we want compliance. Compliance is okay, but it's more important to kind of, create the overall architecture to sort of, move away from this. And for a state like Bihar, it's very, very difficult. And
Yes.
states like Tamil Nadu, I work on Tamil Nadu. As a matter of fact, I've been doing my research on Tamil Nadu. There's a bunch of data which I know about Tamil Nadu, which is that Tamil Nadu is a net loser in terms of the GST architecture because of most of the money which actually comes from the GST is from the manufacturing states. But that money is being devalued to states like Bihar and other states which are not really doing manufacturing, right? And so it's a problem for those states. And so you talked about the GST compensation cess. There's a very unique part about that which I want to point out, which is that the GST compensation cess actually comes out from the coal cess. And so India had this coal cess. And so I've been working on green transition in India and trying to understand when we have money to do green transition, we don't really use that money to do green transition, but we use that to devalue for GST, right? And that also talks about how limited aspirations we have about moving away from coal to renewables or green transition, right? And so, yeah, just talking to you and learning from you has been very insightful, as a matter of fact. And thank you so much for this presentation. I'll let others ask the questions now. Thank you. Yeah, it's been very insightful.
राहुल दा को डाउट नहीं आया?
लग रहा है ध्यान ध्यान से सुने नहीं है क्या?
नहीं नहीं ठीक है।
सौरभ,
कहाँ पे भैया?
अभी दिल्ली।
आते हैं तो बताते भी नहीं है इधर।
नहीं आए नहीं है उधर। आए तो थे, लास्ट रियूनियन में आए थे
अरे दिल्ली
2025 का
कब थे
रियूनियन।
भैया? आप तो बैंगलोर में थे ना?
हम बैंगलोर में, अभी दिल्ली आए हुए हैं काम से।
Saurabh, the Ritesh da is
Yeah,
raised
there
his
is a
hand.
question from Ritesh da.
सौरभ क्वेश्चन नहीं है, बट मैंने अमित को भी बोला था कि
Yes,
शायद
yeah.
तुमको पता होगा, हमारे 1984 के सीनियर दादा हैं पंकज कुमार सिंह, वो एडिशनल सेक्रेटरी हैं जीएसटी काउंसिल में. सो मे बी यू कैन लाइक टू कनेक्ट विथ हिम.
It will be of great help.
Saurabh da and Amit da, like if we do not have any more questions, then should we like move away to wrapping up the session?
Yeah, yeah. But
लंबा हो गया
good
ज्यादा
session,
क्या?
सौरभ।
Yeah,
अरे
बहुत
नहीं,
अच्छा
it was
सेशन था.
good.
Very
It was
insightful.
good.
Yeah.
लंबा से क्या फर्क पड़ता है, ज्ञान
नहीं
आना
नहीं,
चाहिए।
लंबा से नहीं, मतलब ज्यादा उस तरह का बोरिंग जैसा हो गया है, काम का नहीं बस थ्योरी पे।
नहीं इंटरेस्टिंग था It was very
देखो,
insightful.
जिसके लिए whoever is
हाँ वो
for
तो
business and all, उनके लिए तो रहेगा insightful.
So Dada, like I will officially wrap up the session, then we can
Yeah,
do the
yeah.
chit chat.
No ways.
yeah. Thank you everyone.
Yeah,
Thanks,
thank you,
So,
Saurabh. Yeah, bye. It was
So
nice
thank you,
connecting.
Saurabh Das. Thank you, Amit Da, for this wonderful session. Like we all are in debt to you for
Yeah.
this all knowledge and like experience which you brought. And I think most of the alumni who are here and who will see this session on the YouTube will benefit from this. So, and this is the like objective of this session, that people come here and they share their experience, and in the process, people learn like many things, and also like grow up in their business and in their like careers also. On behalf
And
of
they
the
can also
Vidyapit
connect.
Yeah, Dada.
They can connect separately also with me regarding any doubts further, means in future course, if they are in this field or they are conducting business or in starting business.
So, Dada, thank you for this kindness. We will mention that like in the video also, like in the video also, and also like the like Praktani brothers who are here, like they can connect to sort of the like he's like so eager and helpful that he will definitely help you out. So thank you again, Saurabh and Amrita, on behalf of the whole Praktani community. We thank you for your time and this valuable session. And with that, we will now wrap up this session and like open the floor for any chit chat. Thank you, Dada.
Thank
Thank
you.
you.
Thank you.
So,